12 holdings in 5 videos. And in today's video, this is part 3 of my 5 video series, we're going to talk about the two stocks Fisher Paykel and Jumbo Interactive. In the video from last week, you can see a bit of a summary on what my entire portfolio looks like and what my strategy for my Australian portfolio is. Hi, I'm Michael, and we talk about all things related to investing and personal finance. Don't forget to like the video and subscribe to my channel if you would like to see future videos like this as well. As always, at the beginning, a quick disclaimer. I'm not a financial advisor and I do not hold a financial services license. So everything you see here is not advice to follow. Please do your own research and you can read the full disclaimer in my description below. Yeah, so starting straight away with the first stock for today, which is Fisher Paykel Healthcare. Ticker code FPH. And yeah, what is it? It's a New Zealand-based company that designs, develops and manufactures clinical equipment and, for example, devices for the treatment of sleep apnea. Their main market is in the US, and right behind that Europe, and then there's the entire Asian market. Their biggest, or one of their biggest competitors is ResMed, and we're going to talk about that a little bit later in the video as well. So starting to look at the chart to see what the past performance of Fisher Paykel Health was. And when we look at the 5 years chart, you see here on the left, you can see that 5 years ago, the share price was below $10. And it's just stunning. It's just great to see how the share price has developed over those 5 years. And even if you just look the last year, it's exactly what you want to see in a chart from a listed company, from the bottom left to the top right. And it's just incredible. And the financial numbers are actually, so the balance sheets from Fisher Paykel looks actually pretty good, and we're gonna see some of those details now. So yeah, pretty good investment, and we're also gonna talk when I actually got into the company. Unfortunately, I have not taken place in all that price appreciation over the last 5 years. That would have been amazing. But yeah, we're going to talk about that very shortly. So first, talking about the financial, it's a little bit. Fisher Paykel was actually able to increase the return on equity again to over 30% over the past 2 years. It was a little bit lower. It was sitting at around 25%. And even better to see is the revenue growth that the company is delivering year after year. And over the last years, it was actually more than 20%. This reporting seasons, we were basically right at 20% revenue growth per year. And the forecast for next year looks, again, very positive. So they are expecting a very similar growth rate over the next years. Obviously, those great financial numbers that they are delivering year on year comes with a proper price tag, and the PE ratio for Fisher Paykel sits at 70 at the moment, and that's definitely very high. So the industry average sits at around 55. So it's also quite high in general, but Fisher Paykel is definitely is definitely on a very, very high price level at this moment. Fisher Paykel is actually paying out a dividend as well. Dividend usually sits a little bit below 1%, so they are reinvesting a lot of their earnings back into the company. The payout ratio from dividends usually sits at around 50 to 60%. So half of their earnings they pay out to their shareholders, but the other half they actually reinvest into the company, which I think is great to see. I really like to invest in companies that still invest in their growth. So Fisher Paykel is probably one of the best examples of what I'm looking into when I'm looking for investment ideas. And yeah, the current reporting season, as I already said, that was actually pretty good. Solid growth. One of the outstanding numbers was the growth in the hospital segment. They were actually able to grow by 390%, 390% in the last year, and that's just amazing to see. And there's future growth expected over the next year, so nothing to complain about. And just let's hope that this journey will continue for a couple more years. Talking about the performance that I was able to gain with Fisher Paykel, and I'm actually holding this company not very, very long. I bought into Fisher Paykel in April 2020, but I mentioned already that I was holding the competitor. And that is ResMed. So I was invested into ResMed a couple of years actually, or 1.5 years, and I was able to take part in a quite good performance, but I sold out of it beginning of the year. And this certainly was a great decision. I don't have the chart, the share price chart from ResMed here, but if you put them over the share price and the chart from Fisher Paykel, you see which one the better investment was. So I bought my shares from Fisher Paykel in April 2020, and since then I was able to achieve a performance of over 28%. So my average share price that I was able to achieve with buying was just below $26, so $25.90 an average share price here. So yeah, very good investment for me, and I'm certainly willing to hold onto this stock for much longer. Looking into my second share for today, and this is Jumbo Interactive. And yeah, what is Jumbo Interactive? It's one of the leading web platforms, basically, that offer internet lottery here in Australia. They do have also business overseas, in a little bit in UK and in Fiji, but their main market is here in Australia. And this by, I think, over 90% of their revenue comes here from Australia. But a fun fact here, Jumbo Interactive was actually operating in Germany as well. And they started doing that in 2013 because they saw a potential high growth in the market in Germany. Unfortunately, because of the harder regulations, they were not very successful, and they basically reduced their business in Germany to a very, very small amount, and I think by now they even reduced it completely. However, the activities are basically stopped in 2016. And yeah, it was an interesting read on their investor relations webpage on when they started and when they then just a couple of years later decided to reduce that operation there in Germany. And yeah, another recent thing that happened for Jumbo Interactive is obviously a deal with Tabcorp. That was one of the reasons why the share price dropped so significantly after such an incredible rally. But let's have a look into the share price now. And so yeah, as you can see from the 5 years chart, the stock obviously had an amazing rally up until the basically second or third, but basically up until the third quarter in 2019, and then there was a massive drop. So got up from just a couple of dollars back 5 years ago, and up until over 30 or almost 30 in the 52 weeks high. And then when you see just the last 12 months on the right side, you can see obviously that the share price went down quite a bit, and even down to $7 back in March. However, it recovered already pretty good since then. So basically 100% increase. And as I mentioned, I bought in at, or actually we will talk about that later, but I was able to buy that company the first time for $14 and then later on for $11, but we'll see that later on. But again, from the share price, you can see, yes, we are now on an upwards trend again. It will probably take a while until we are back at those levels that we have seen a year ago. But I'm certainly confident that the company will come back to a better level again. So yeah, let's talk about the financials a little bit, and that's so solid. It's just incredible to see what financial situation Jumbo Interactive is in. The return on equity is 33%, and they can keep that constant. The revenue growth over the last years was just outstanding. Insanely high. This year, the revenue growth is actually not very high. We have 9% revenue growth expected this year, and this is fully in line with the expectations. And we have a forecasted revenue growth for next year that will be at around 20. And the PE ratio, because the price got so much down, is now at 35. So actually quite reasonable for a company that has still an expected growth. And when you see the industry that they are in, Jumbo Interactive is paying out a dividend, and they are paying, the payout ratio is between 80 and 90% of their earnings. And the current dividend yield sits around 3.5%. And I mentioned already that their main business, and basically all their business, is coming from internet lottery ticket selling. However, there is a software as a service part that Jumbo Interactive has, and they try to establish that more and sell their software as a service to other companies as well. Basically, the platforms that they have delivered that they then sell to other companies to utilize those platforms as well. And this is certainly increasing as well. But unfortunately, it's still way below the revenue that they generate from the selling of lottery tickets. Some further updates to the reporting season. As I mentioned already, the financial reports were absolutely in line with the expectations that the market had. And one of the most important things to mention, the recent update from Tabcorp, that they actually are willing to adjust the deal that Jumbo Interactive had to sign with them for the licensing in WA. So it might be delayed, and it actually might be reduced as well. So potentially it's not that bad for Jumbo Interactive. And if that actually will get confirmed, I would see the share price going up again as well. Obviously, this is a speculation, but it would be incredible to see. Even if not, I believe that the company is set up for growth. but if the deal will be adjusted slightly, this will have a positive impact for their earnings as well. The customer growth is growing, and obviously, especially now that more and more people stay online and do all their shopping online, and also their lottery ticket shopping online. I think that the current situation certainly is just helping Jumbo Interactive to become a more established player. And once people have signed up for the service, I'm very confident that they utilize the services more and more. And also, the company is completely debt-free. So there is certainly all the money that they generate, they can just reinvest, and it's just outstanding to see how well they are doing. I talked already a little bit about the purchases I made in Jumbo Interactive. I bought into the company in January and in April this year, and I was able to achieve an average share price from just around $13 per share, which leaves me with a return at this moment that sits at around 8%, and I think that's definitely okay, especially looking into the current market situation and knowing that the company is set up for growth. So once again, a company that will not leave my portfolio this soon. So yeah, recapping very quickly with Fisher and Paykel Healthcare and Jumbo Interactive, two companies that I hope I will have in my portfolio for much longer, because I believe that both companies are set up for a very great future growth and a stable future growth. Obviously, with Jumbo Interactive, it's always tricky because their market can be regulated, or there can be changes, and if the market changes, their business model obviously would have a huge impact. But staying positive for the overall performance of the business. In my next video, I will cover Macquarie Group and REA Group. Those are the next two shares on my list. Yeah, I thank you for watching this video. I hope you enjoyed it. Don't forget to click the like button, and I'm looking forward to see you in my next video. Until then,